We started trading at the end of February, just as COVID was breaking, but our share price is up 5x. Most of what's in the market today has been around for a while. This is a new PGM discovery on top of what is already a large nickel discovery. We did it with Dumont. I think there's confidence with the investors behind us that we'll be able to do the same thing with Crawford. But because we've done it before, we're going to be able to do it in a much quicker, much more capital efficient fashion.
Welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up, much appreciated. And do leave your comments below, like a lot of you are. Thank you very much for that. As it helps us understand the sorts of questions you'd like us to be asking, how you think we're doing, and what you think of the company. And if you haven't already done so, click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We spoke earlier today to Mark Selby. He's the CEO of Canada Nickel. They're the newest nickel story out there. Their share price has trebled since the last time we spoke to them. They're looking to develop their Canadian nickel project, getting a PEA done by the end of this year and a feasibility study done by the end of next year. So very rapid indeed. Today they announced some drill results, quite attractive, with some PGM upside, 2.6 grams to be precise, pretty attractive stuff. So we talked to him about those things, also about the macro factors affecting the market at the moment. Take a look in the description below. Anything interests you in particular, click on the timestamp. And if they click on the number, that'll pop you to that part of the video. Let's hear what Mark had to say. Hey Mark, how are you doing, sir?
Great, Matthew. How are you?
Not bad. Been a while.
Yes, it has been.
But and a few things have happened since we last spoke. Good and bad.
No, it's good. We keep moving the ball, so that's the key piece. And there's this fires thing that's appeared. So
I read about that. Yeah. But look, press release is out. There's a few things on there which I want to talk to you about. I want to see how things are going, because I was intrigued by nickel generally in this market and hitting people trying to hit this cycle. There's a real kind of interest in it, but you guys have done a financing since we last spoke as well, so I want to talk about that. But first, can we just kick off with that 1 minute overview for people new to this story, and we'll pick it up from there?
Sure. So, this is what we have is a very rare thing. It's a brand new nickel sulphide discovery. It's within 6 months of drilling, we created the 11th largest nickel sulphide resource globally. We are, because of my experience at RNC Minerals advancing Dumont, and I was a head of strategy at Inco before that, we're able to move nickel projects very quickly through. So, and as a scoping study by year end, feasibility study by the end of 2021, because what we fundamentally believe is that nickel goes through these super cycles, which are relatively unique to nickel, every 15 to 20 years. And we think with the EV overlay on top of already strong demand from stainless steel and other traditional nickel demand sources, that we're heading for one of these in the middle part of this decade. So to get one of the few large-scale nickel projects outside of Indonesia ready for that market, we think is going to create a lot of value for shareholders.
It'd be great if you can do that, but they are quite expensive to put together, aren't they, traditionally?
Oh yeah, I mean, nickel projects at the end are to build a nickel project is $1 billion capital, and again, when you look at most people in terms of how much money they need to spend on drilling, the nice thing about these larger scale, lower grade operations is they don't have the sexy high grade attached to it. But the reality is your chances of actually finding a resource of the scale that's going to attract a major. You can drill these off relatively productively when you know what you're doing. And so, we did the first 11th largest from scratch for $4 million. And this PEA is going to cost us about $4 million to get done. We'll continue to expand the resource. The higher grade part of this resource, that's really what we're focused on here, is adding value, not necessarily tons. And so, we'll be able to deliver, our feasibility study, we hope for, somewhere between $20 and $30 million, max.
And what is the timing for all of this? You talk about doing a PEA by when, and when's the feasibility going to get done? Because if you're going to hit this cycle, you're going to need to get your skates on, right?
Yeah, and I appreciate the Canadian analogy there.
Thank you.
We're skating as hard as we can. So we'll have that PEA done by the end of the year, hopefully a little earlier than the end of the year. And then we've got a whole team of people that we've worked before. We're getting them into place, and the whole goal with that team is, the scoping study is going to be a sort of a pull-up before the end of the year. The goal is really having that feasibility study done, by the end of December 2021. Because the reality is in terms of you want to be one of the first projects out of the gate to attract the large scale investors. And then two, in terms of takeouts, valuation wise, if you look at what nickel sulfide discoveries, large ones have gone out for in the past, you get 1 or 2 per decade. They tend to get taken out between scoping study and feasibility study. So we want to surface that value as quickly as possible for our shareholders.
Okay, and you raised this money recently. What type of people came in? Because I know everyone's sniffing around EV revolution, battery revolution, whatever you want to call it. Nickel is at the forefront of a lot of people's minds, but there's a lot of stories out there too. How did you find it easy or difficult to raise capital?
Well, we chose probably one of the sort of second worst months in the history of capital markets to go to raise money back at the beginning of April. I mean, gold has been able to raise money, and it's good to see the money that's being raised in gold. But outside of gold, there's been almost nothing raised in the base metal sector. So I think it is a sign of confidence, in the nickel story generally, and then B, in our project specifically. That we went out for $2.5 million, and we ended up with $4.5 million. And our share price is basically tripled since we've we announced that story. I mean, we started trading at the end of February, just as COVID was breaking, but our share price is up 5x during that time frame.
Which is insane. So obviously people are liking what they're hearing. So what precisely do you think that's resonating with them? Because again, we've spoken to companies telling nickel stories, they're not getting that kind of reaction.
I think that it's a new nickel sulfide discovery. A lot of nickel projects that are in the market are kind of have been around before and been recycled. This is truly a new discovery. B, I think it's the potential scale of this asset. Again, in this market, what has traded well and get valued well are those projects that have the scale that can attract a major. And I think our initial resource, which was the 11th largest right out of the gate, and we just scratched the surface of what we have. I think has really got people there. And I think 3. I think there's, we did it with Dumont in terms of getting from, resource right through to fully permitted project. I think there's, confidence with the investors behind us that, we'll be able to do the same thing with Crawford. But because we've done it before, we're going to be able to do it in a much quicker, much more capital efficient fashion.
Okay, interesting. Well, talking of which, let's get into the news release here, because you've done a bit of drilling. You got some numbers that look good to me. But why don't you tell us about it?
Yeah, I mean, there's 3 key takeaways, from those drilling results. First off, in terms of the nickel resource, so we drilled off one portion, which is less than 20% of the structure that we have there to deliver that 11th largest resource. These are the first new step-out holes. And so, from the first 2 step-out holes, we basically confirmed that this, we've more than doubled the strike length of what we've got already. So in terms of, resource upsize, that should give you some sense of what the scale of this resource could go. Secondly, and probably the most important point is, the first assays back from the first drill hole was the highest grade nickel intersection that we've drilled to date in that main nickel dunite area. So it was 55 meters at 0.42% nickel and with 0.2 grams per ton palladium plus platinum. And that's about 6 times what our average PGM grade is for the resource. And again, what we're drilling for is we're drilling for value, not for tons. So, what's going to make the PEA exciting and what's going to make the people get excited about this project is being able to fill that mill with as much higher grade ore for the first years of the project. So, that's where we're really, zeroing in on. And then the third takeaway is, we hit this PGM zone sitting about 100 meters outside our main nickel resource and hit it consistently across several hundred meters down to 500 meters depth. And, we've hit it in 2 other places. So again, this, offset mineralization that is going to double the strike length. It's been hit in 2 separate places in the same spot, 1.2 kilometers apart from each other.
Right.
And then the other place that we targeted to drilling was 1.5 kilometers away from our last drill hole on the main intersection. And, we hit 2.7 grams per ton. So most of what we hit before was 1.5 grams per ton. This 2.7 grams, and there was actually 3 separate intervals that totaled nearly 30 meters of 1.5 gram material. There's very few PGM hits outside of South Africa. And again, most of what's in the market today has been around for a while. This is a new PGM discovery on top of what is already a large nickel discovery. So, I think that's the thing. People are pretty keen on palladium, and there's very few new palladium stories. So, I think, what's we're not going to change the name yet, but from Canada Nickel, but the palladium part is going to be a pretty important part of byproduct credit in the economics for the PEA and the scoping study.
That's fascinating. That's a sort of meaningful grades there on the PGM. But can I just come back to, and I'm sure as you drill out more, you'll tell us more about that.
Yeah.
Can we talk about what you mean by drilling for value? I want people to understand this, because I'm not sure I completely understand it either. The old model is drill for resource, and you're building out the size of the ore body, and that's the old way of doing things. You're trying to do things in an accelerated way, so you're trying to bring the good stuff to the fore quicker. Is that what you're doing? Is that what you mean by that?
Yeah, no, that's exactly it. I would say Australian mining companies tend to do it sort of, they tend to, build enough resource to get their mine built, and they get going. In Canadian resource companies have tended to, just build out larger and larger resources, and that when at some point they'll put some economics around them, but it's all about making the resources large as possible. We already, with the first set of drilling, we're 11th largest already. The key piece that's really going to move, and we have enough resource for a 50-year mine life. The key piece is really finding more higher grade, higher value material to be able to mine in the first few years of that mine project life. So the geophysics that we've got sort of points us to where those higher, best areas may be. And so, that's where we've been focusing our drilling, as opposed to just stepping out, on a standard basis and trying to add, as just maximizing tons for the sake of maximizing tons.
Okay, so things are going well. Share price, appreciate. It's great. Well done. The numbers starting to look good. Going to try and deliver this PEA by the end of the year. I'm assuming, therefore, COVID-19 has not drastically impact your ability to move things forward. That seems to be what I'm hearing.
Yeah, Northern Ontario, in Ontario, mining was deemed an essential business. So whereas a number of other businesses and their supporting businesses shut down, in Ontario, we were allowed to continue operating, and we were able to, the work that we're doing is still, we can still do it in a way that keeps our employees safe. And so, we've been able to continue drilling. Our assays have slowed down a little bit. That's where you'll see there's 9 holes of assays pending. But by and large, all the suppliers and support industries have been able to, to keep working safely, and we've been able to continue to move things along, which has been great. Okay,
and what's your view with regards to how all of this? Again, I'm talking about COVID-19 is going to impact the battery market. Is there going to be a slowdown before it gets back up to what it was aiming to be before? Is there going to be an impact? Because we've had a couple of CEOs come on here and go, it's absolutely devastated the supply chain. It's going to impact the way people think about these things. What's your take on it?
Yeah, so I think it's really more, well, let me talk about the battery market in general and then more metal specific. I think, in terms of, we are going to go through, several months of economic slowdown, but I think, you're going to see governments want to stimulate the economy. So, the Chinese have always done it through infrastructure projects. And if you look at the stats that are coming out over the last 6 weeks, they are, you've got, copper mills running at more than 100% of capacity right now. Iron ore prices, huge amounts of iron are now going into China. In the nickel market itself, you've seen a lot of the physical numbers improve pretty dramatically. So, I think that's going there. I think in the West, where consumer spending is the biggest driver, governments are going to, have to provide incentives or mail checks to people to help, get consumer spending to the point where the economy is going to be growing again. And again, cars as a big ticket item is something where, you're going to see government incentives show up. And again, there's a lot of discussion among politicians around sort of using this opportunity to retool or redesign their economy. So I think, a lot of those incentives are going to be geared towards, okay, we're going to give you money to buy a car, help you buy a car, but it's going to be only if you buy a clean car. So for those people who are kind of on the fence about buying one, oh, okay, if I get $1,000 from the government to do it, then I'm going to do it. So I'm not as doom and gloom in terms of, I think it is going to be pretty challenging, for the next year or two economically, but I think, the way out of this is to stimulate the economy. And so I think those incentives will come. In terms of the individual metals, the metal I feel sorry for the most, I think, is cobalt through this process, because it's got three whammies. If you look at cobalt sources of demand, one is alloys for the oil and gas industry, which is just, kind of took it in the teeth. The other part is for super alloys, in the aerospace sector. And so, again, airplane travel is something that's going to take a while to, fully come back. And then, you've got the EV market, which has become the, third source, which is going to be, again, a few bumps here going forward. So I think cobalt's got it the toughest. Lithium, again, you've just got so much supply sloshing around that, as we go through this low point. And, I don't think, I might be wrong, but I don't know how much lithium production has been impacted by COVID. Where we benefit from nickel is, the one of the major mining sources is mines in the Philippines, and those we're going to have to ramp up to help make up for the ore that's not coming from Indonesia anymore. But those mines have been shut for, quite a period of time, and have just been extended again. So, we're seeing ore stockpiles coming down in China pretty dramatically. And so, it is, I think that's important for investors, is to think about the COVID impact, not just on demand, but on the supply of the metal. And nickel has come out of this in pretty good shape relative to the other metals.
That's fascinating. I always love listening to your take, because you understand it with regards to the macro. So I appreciate that. Well, look, Mark, exciting times for you guys. I guess you've just got a whole bunch of deliverables to be able to get that PEA done. You feeling confident by the end of the year? That's definitely going to happen?
Yeah, I mean, between now and then, we'll have another resource update out in July.
Right.
We'll have another resource update in October or so before we finalize the scoping study. We'll have a whole series of drilling and mineralogy results. Again, for these deposits, the key issue is, okay, how much of the nickel can you actually recover? And again, what we're seeing so far is very encouraging. But we'll have those numbers come out, and again, those are going to be the key de-risking events in terms of how do we've done well, getting from 25 cents to $1.25, and how do we take this to $5 a share or higher from here? It's going to be some of that news that comes out over the summer. And then the other big thrust of this too is it's easy carrying around high grade core that looks very sexy. I did that in a prior life with rocks with chunks of gold in it, and that definitely gets investor attention. But I think in terms of delivering, building a project that the majors are going to be interested in, large lower grade projects. Part of the reason I'm so keen to get the economics done is to really demonstrate to people it's like, yes, it's low grade, but you're going to build an operation that's even, equally low cost, and you can deliver very good margins. I'll point people to Boliden's ATIC mine in Finland. It's in Scandinavia. It's a 0.22% copper with a tiny bit of silver and gold as a byproduct credit, and it is in the first quartile cash cost for copper. So it has a fraction of the grade, but because it's in the right location, lots of infrastructure, it has a productive workforce, and it's built to the scale, it's the right scale for that kind of grade. They can make money all day long, and so that's what we want to demonstrate with Crawford. That we're going to be able to build that kind of scale operation and generate those kind of cash flows for many, many, many decades to come. Okay, well, Mark, I appreciate your time today. I'm just delighted for you to have got the ball rolling and got the money in as well. But you clearly know what you want to do and how you want to do it, which is fantastic. Now you've got to go and do it. So yep.
Over to you.
Hold
stay in touch.
Fire.
Yeah, hold your feet. I will. I will. But stay in touch. Pick up the phone. It was lovely to be able to speak to you today. And keep delivering.
Thank you, sir. We'll talk soon.